Hey, what is up, everybody? It is Monday, January 8th. Hope everyone had a Merry Christmas and a Happy New Year. Let's kick it off. Look at the U.S. futures markets here. So starting off, I've zoomed out here to the hourly chart. Let me take my workout off there. I don't think y'all care about the workout I'm working on. I'll tell you what, we'll just go ahead and... Hey, what is up, everybody? It is January 8th, 2024, and hope everyone had a Merry Christmas and a Happy New Year. We are, of course, going over the U.S. futures markets, so here we go. So starting off with the S&P 500, I've zoomed it out a little bit over to the hourly chart because one thing I started doing is really looking at the way the market is. And so as you can see, like when it's going up, I have the green lines right here where it's going in an uptrend. This kind of purple highlighted box right here means it is in consolidation phase, and then of course the red lines means it's going down. And so what this helps me do is just realize, okay, if the market's obviously in an uptrend, I really want to focus on trades that are going to the upside, and trades that are going downside. And then if it's in consolidation, you can take them either way. So that helps filter out a little bit the trades that I will be looking for, and it's just one piece of the puzzle that's going to help me trade. I've used it before, kind of got lazy and didn't use it in a while, but now I've gone back to it. And the thing about it is it doesn't predict where the market is going. It is after the fact, because a lot of these trend lines that I draw is after the fact, and it's on a higher time frame than I trade because I typically trade on a 15-minute time frame, sometime down to a 5-minute, but typically 15-minute time frame, and this being the hour, it gives you just a little overall better picture of the market. So as you can see within it here is that, within like an uptrend, it starts from the consolidation phase or basing and goes up, and then you have consolidation phase up here. But as you can see, the consolidation phase, it starts within the uptrend, and just like this uptrend down here, it starts with a consolidation phase, and then you have this downtrend right here. It starts within a consolidation phase. So you don't know exactly when the phase is going to start to begins until after it's kind of kicked off a little bit of ways. But it gives you a good idea where you can at least rule out one of the three moves the market is going, because obviously it's like if it's going sideways, well then obviously if sideways or slightly up, well then obviously it's not a downtrend, so you don't have to worry about that. You just worry about going sideways and up. But anyways, that's just one thing I started doing here from now on. So as you can see from down here, we were in a nice downtrend right here, but today just kicked it out of the some notes I have. I'll go over those trades here in a little bit, trade setups, and it kicked it out of the downtrend. So we are out of the downtrend. It's so now it looks like we are moving off to an uptrend. Not sure exactly what that channel is going to look like yet. Still too early for that. But just one thing I'm going to see is it truly out of the consolidation phase right here, or is it going to be a bigger consolidation right here? Because I'm not willing to move this down any further. That's a big enough consolidation box, typically from what I like, but it fit really well up there. So we did have this move down right here. So I'm looking at perhaps like right around, let's see here, probably like there to there, or maybe even there to there to be the consolidation phase for it. So that is what it could be for the consolidation phase before we have to say that we're moving it up. And typically how I draw these trend lines is I take it like if it's going from if it's going in an uptrend, well I normally don't start off drawing from the bottom of it. I draw from the top sides, and if it's going from the downtrend, I draw it from the bottom and drag it up. So just show you real quick. One thing that does help with the semaphores is usually what I'll do is after I see it's kicking off up, I'll take kind of the last semaphore right here and then just start drawing it over. So you see that where it would look like initially, but then it breaks up way out of there right there. So obviously that's probably not it right there. So then what I'll do is go and take it from like right there to right there. So that one, look at that. That one fit very well right there. We got a bunch of 1, 2, 3 touch points right there, 4, and then we have an easy breakout right there. So that's how simple, easy way. Try not to spend too much time drawing these trend lines. Like I said, there's just an overall guide for it. So that's what I'm looking at for right here. So we'd probably look at using this one right here, but we need the market to pull back some, to create that stair-stepping pattern up for it, for us to get a good to get a good guide of where the trend is for this. So that's what it's looking at right now. It looks like we're coming out of this. Not draw that to the right anymore. Looks like we are getting. Looks like we're getting kicked out of this downtrend that we had been in for the past, let's see here, 1, 2, 3, 4, 5, 6 days. That was also kind of a consolidation phase of it right there. And then it looks like from right here, it could kind of look like a little wonky consolidation phase that we're in right over here. And now it looks like we're getting kicked out of that, and we're going into an uptrend here in the S&P 500. So probably the other market's going to be in an uptrend as well. So going down the 15-minute mark, 15-minute, what we had right here I looked at was a triangle trade. You can see I just made a nice little triangle right there. And these notes I put down here, because over the break I was going over a bunch of different things. I didn't like the way some of the trades were working out using the inside pitchfork for all of them. So after a lot of back testing, this is what I'm currently using right now. That for the triangle trade, we still use the inside pitchfork for it. So here we have points 1, 2, 3, and 4, and so you have points 3 and 4 within 1 and 2. So you just put the pitchfork on points. Let's see here, 0, 1, 2, 1, 2, 3, 4. So we're looking for a move down right here, but as you can see, that did not happen. That we're looking for a price to close below right there. So that one didn't happen. So that one is said and done right there. Because we're looking for coming off the fourth pitchfork, the fourth point, we're looking for price to close outside this blue line, and it would have gone down over here. So that didn't happen. So we can go ahead and take that off right there. Now we did have an ABCD trade right here. There's an A, B, C, and D. Well, it was a potential one, excuse me. I'm not sure if this one wouldn't hit. So we used the shift pitchfork on A, B, and C. And no, that one didn't hit as well, because what we're looking for is price to close down below the L line. So basically the two trades I was looking at, they never formed and never happened for it. But what we do have going up right here, though, is we do have an ABCD going here to the upside. So we have, and it may have already hit, to be honest, B, C, there's the D way up there. It hasn't come back retraced yet. But if we take the shift, there's A, B, and C. Yep, this one is said and done. So we'll look for an ABCD trade is when the price closes above the yellow line right there. That's a signal to go long for it, and the target's up here to the blue line. So that one went up there and got hit really nicely. So that would have been a really nice trade. And so another thing I'm testing for the shift pitchfork is this white target up here, which is the 3.618 line. The yellow line is 0.618, blue line is 1.618. So testing the 3.618, because I have seen it a lot of times go up there and get hit, but I'm not sold on it just yet. So if it is going to be one, then the target we have is when price closes above the blue line right here is going to be the yellow line right up here. So this isn't a trade I'm willing to go live with just yet for going up to the white line. The blue line is, I'm good with it. And there's also a bunch of other aspects we have to it, where if the price comes down, retraces down here, comes back down into these Fibonacci get that thing, comes down into these Fibonacci levels down here, which will move the exit targets for it. So that's just one thing that I'm going to keep in mind going into tomorrow for it. So we just have that little test trade right there. Going over to the Russell 2000. Now let's back out to the hourly chart so we can see what it all looks like. I have a lot of notes right over here for everything. They're doing a lot of work over the break. We're definitely in a downtrend right here, and just like the SP 500, it looks like it broke out of it right there, and this is looking like a little bit better of a easier consolidation box to find right there. See that? There's tops in it, bottoms hitting it right there. So yeah, it looks like that is the consolidation box, and now it's breaking out, and we're going to an uptrend right now for it. And of course, now they're going to uptrend. I'm shorting it right here. So oh gosh. But the reason why is, I'll tell you what, let's take the consolidation box off of there. We'll need that on there right now. So the reason why is here we have the triangle trade right here. I'll take that off of there. So here we have it. There's the point 1, 2, 3, 4. Price came back down, closed below it right there. You can see it right there, and then close it below again the second time. So the initial trade was having it from right there to right there. I typically don't take the initial trade. I wait because just like we saw in the S&P 500, it did work just fine. But from what I like to do is typically the bigger moves happen when the price goes away from it some. And unless I'm just willing to get in multiple contracts, then I don't typically get in for the wherever the entry is. Eventually, I will start doing that, but the safer play right now is waiting until in case price moves away from you. Now, of course, I'm going to miss out on some trades doing it that way, but this is a lot safer than that as far as it going to get you. So anyways, so here's the original entry. Now price continue to go up. So what we do for that is we take the there to right there. And you can see when price hit, we just take it from the high of the move down to the low of the move. Typically, it's going to be right here for this one. This one didn't, went a little bit lower for it. Yeah, I'm sorry. We take it from right there. So when price hits the 50%, which is right here, that signals us that we're going to move the exit down either to the entry where it was or the 1.146, which is pretty similar to it. But if the price continues to move up and hits the either the 1.146, which it did right here, or the other trend line, which I believe is the 5 line, yeah, 5 line for it, then the exit moves to the 23.6 right there. So we can have it just slightly above it right there, and just make sure you get out of it. So that's why I got in right there, and I just decided to put it at the 1.4 and 4. If went up there and got hit, awesome. It's close enough to the 5 line to where we're still getting in at a real good level for it. So that's what I'm looking at here for the S&P 500 is for price from this trade setup is to come down as of right now to where the entry bar is right here. If price goes up a little bit more, hits the green line right up there, then the exit would move to the 23.6 line. I'm just going to leave right there the 23.6 line for now, so I don't have to mess with it, because I'm anticipating it going up there and hitting it at this point. And so yeah, that's what this is looking like. And if this goes up there and gets hit, all that happens and everything, then we would have kind of a nice trend line going up as well. So we take like that point right there, we could have something like that, and then coming down anywhere like down into here, because you see how this is just, that's just a wick down right there, 15-minute chart. So if we go that would create a nice trend line looking like it's going up right there. Obviously for the, and there it is, look like at the 1 hour chart. So that could be potential, and it would be good because that would come down, and that would be where the bottom of the potential trend channel is down here. So that's what we're looking for in the Russell 2000 tomorrow, going up a little bit higher, hitting it right there. Then I am looking for a retracement come back down that way, not just because it's trade, but that would create a real nice trend channel going on, a real strong looking trend channel going on to the upside. Going to the Dow Jones, same thing as the other two markets, coming out of consolidation up here. I didn't draw it up here, but then we just have the downtrend right here, and price is broken out just like the other two today. So what we did have right here was an expanding triangle trade, and this is one I changed up from being the inside pitchfork to the Andrews pitchfork, and what we're using is the 88.6 level. I'll show you how it works. So here we have the 1, 2, 3, 4. Here you have the 1, 2, higher high 3, lower low 4. Just using the symbol forwards that are in a row right there. So got it set up. So when price closed above, let's hide this real quick. So when price closed above the median line, which is right here, and there's the little green line, that's the entry bar right there. Target was up here, this green line right there, which is the 88.6 line. But see how price moved down the other way, hit the 88.6 the other way. Then what we do is we move the you know what, this I totally missed this one. So this one's already done. That one doesn't really matter. So it's two ways to look at it real quick. So price came down, hit it, so change it to the exit, moves to just to where initially where the price breaks out of the median line right here. You can't have it at the entry line right there. I like playing it safe, so just where the price And I forgot to mark that. That's why I was all looking at differently. I was doing this trade anyway, so it doesn't matter. But so initially, you know, there's the entry. Here is the exit right there. Price went down and hit it the other way after it happened. So I move the exit down to where price breaks the median line right there. And so that's where the entry was. So as you can see, price came down there and hit it. Went there and hit it right there, and it would have been over. Yeah, I'm glad I'm reviewing this because I didn't even see that, and I was thinking the exit was still right up here for some reason, or right up here, which was completely wasn't correct, even though it did come up there and work. But anyways, that was from that trade today. From that, and then I mean now this is an ABCD trade right here. Is this a shift? Yep. I believe I already went and got hit. Yeah, look. Closed above the yellow, hit the blue, closed above the blue, went up and hit the white right there. So when it works, it works great, but I'm just not confident enough in including that 3.618 level 4 right there. Then what we are going to have though is we do have a potential expanding triangle trade going into tomorrow. You can see we have, there's the 1, 2, 3, and when this turns orange or red, to have red you have to have an orange, so we'll just look for an orange right there. That would create the 4th point for the expanding triangle trade. 1, 2, 3, 4, 5. So we put the Andrews pitchfork on it. And so we'll look for whenever this high solidifies up here, creates an orange semaphore, we'll look for the break down into right there. And then that would create the target being down here at the yellow line, 88.6 line right there. For the Andrews pitchforks, let's put, I'll put that back on there, put that back on there. There we go. Yeah, you can see the previous day's highs and lows right here. I don't think this didn't even reach down to the 1.146. Yeah, it came close, but didn't. Went back the other way, and then stopped it right up here to the other side for the extension high of the day, right at the 1.146. So it's pretty much an extension to extension day right here. It's a very bullish day when that happens, when it goes down. And in the what was the overnight session? Yeah, overnight session is getting close to 1.146 extension low, and then blasted off, hit it here up in the high. Very bullish day, and obviously a very bearish day would be, meaning if it hit off the extension high, went all the way down to the extension low. So very bullish day for the market. And looks like we are also coming out of the downtrend like we were in the other two markets. All right, old oil right here. And this is one of the reasons why I got rid of the inside pitchfork for a couple of trades, because it just wasn't working out how I needed to. I was expecting it to go up to about $76. Came up and did hit the 23.6 extension for the trade for it to get out, but I just did not like the way it was set up for it. But what we are looking for is, so what we have is, with an uptrend, then there was consolidation right here. I think it looked like something like, where was it? Something like this. It's just kind of a wonky consolidation up here, at the top, right up there. Maybe not even that far, something like that. But as you can see, there's a consolidation area right there. Then we have a downtrend going into it. Now we have some consolidation. Looks like it is going to be kind of a bigger consolidation area. Going down potentially like something like that could be the consolidation box before we move. What looks like we're moving into an uptrend for it, kind of like the other markets, although oil obviously doesn't follow the other markets for what it's doing, but that's what we're looking like right now. It looks like we are breaking out of a kind of a shorter downtrend cycle and going into a potential uptrend. If we look at the 1 hour chart right here, we can see what we have. Where is it? See, those are lining up really nicely, and then we have, see that right there? Those are lined up really nicely for a nice little uptrend for it. So it does look like we're coming out of this downtrend, and we have like a weird, just kind of a bigger consolidation kind of right there. What it looks like now, we're getting to kind of a grinding uptrend up here. So we'll look for tomorrow to see if this thing is going to follow through with this being an uptrend. We would look for a bounce here to the upside, and eventually, keep on grinding its way up here into the 75s or so for the next couple days and potentially into the 76s if this is going to be a legitimate uptrend. It does look like it's pretty good shape right here looking at the 1 hour chart, just because these using that semaphore are bouncing off that nicely, and we can move it down here to the low. It's bouncing off nicely over there, so that does look like a really nice trend channel that we have moving up forward for the crude oil. And then what we also have for it is we have potential trade set up right here. It's an expanding triangle, 1, 2, 3, 4. But what we do need that to turn orange though, because you can see we have orange, orange, red, orange, and so we do need that turn orange. So more than likely, once this gets off a little bit more, this will turn orange down over here, and that would solidify that's expanding triangle. Then when it closes above the median line right there, we will be looking for price to go up here and hit the yellow line right there. You know, in the probably below 73.50, somewhere between 73.50 and $73 is what we're looking for. So we are looking for more upside here in oil. What is this? 1, 2, 3, 4. Well, we do also have, I think this one's done though. Let's see, because we do have an expanding triangle just using the red semaphores. Yep, that one's done. See it close below it right there, then went and hit right there to close that one right there. So the one we are looking at right now is that one for potential one to close up. We did no, never mind, I thought that was an ABCD trade. Here's an ABC trade right here. What I look for is price coming at least back to the 23.6. I was looking at the 50% one right there, but I've just seen so many moves with our extremely strong moves when price is at 23.6 retracement level. So I started using that, because that's also what I look for in the 5-wave L8 move, which is still viable. Because I still do have it. Yeah, that one right there. Yep, that one. But I've just got so many other trade setups to look for right now, that counting the L8 waves. I guess we could start counting it down here, since this was the last lows down here going all up. You see I got lazy and haven't been counting them down. So yeah, let's see what that looks like for this. Oh yeah, that was the easy one right there. Came down, hit the blue, came down, hit the white, so real easy. And it looks like it went, let's see, did it go down to, definitely not that low, 6.85. Yeah, right on it. I don't know, maybe you need to start leaving that on there. I'll change that to another color. We'll change that to black. Sure. No. So maybe another one to look at right there, even though I just started looking at that. Yeah, 6.85 is just a Fibonacci level if you divide the Fibonacci numbers divided by themselves. So we'll look at that one as well and see. But right now, like I said, the white one and which is 3.618, the black one, which is the 6.85. Those are ones I'm not taking. I'm just looking for the blue target initially right there. But that one's said and done for that one. So yeah, next one we're looking at is just closing above. You know what? I need to make this thing. I need to make the median line bigger. There we go. All right. So yeah, so that's what we're looking at going into tomorrow. Nasdaq going on over here. This is one a